The important point is right after this big update, supply has been decreasing. The lack of the supply suggests a continuation of the relief rally. We could still see further push for the current relief rally and into where? Into the obvious level. Here is the big gap. Here is the axis line. If we could see further push, it should test around 5,700. The 50-day MA should come down and act as the resistance level that's also close to the 200-day MA. There are many resistance overhead that doesn't look constructive. Based on what we discussed last Tuesday, where we compare, even we do get a selling climax, even if this is a true bottom, it's not uncommon for it to have automatic rally and then secondary test go all the way back to test the previous low, sometimes even create a lower low. That's what happened back in 2022. This is a good example on the bear movement, create temporary bottom selling climax, and that is the automatic rally. And the secondary test take out the previous low. After that, there's still a choppy movement, consolidation, until breaks out from here. Breakout, come back, have a test of the 200-day MA, and then go up. You have time to go in. Do not want to rush into the market and pick the absolute low rather than pick the right price and also the right stock. If you are trading, it would be common to get stop out because the high volatility involved. That's why it's not a good environment to trade unless you want to catch a quick swing up, quick rebound. Any setups that I discuss here is purely for the short-term bounce because there is still some more room ahead based on the structure and also decreasing of the supply and also lack of the commitment from the aggressive bears. That's why it suggests a continuation of some more upside until it could draw up excessive supply. Means we want to monitor whether we'll have excessive supply at the key levels where people want to sell into strength, and that could resume the downswing. If you are a short seller, pay attention to the condition where you see suddenly a spike of the volume and a big bearish bar pop up at the key levels. That's the signal go short. And whether you want to dive into the smaller time frame like the hourly time frame or even the 5 minutes, 15 minutes time frame is up to your trading plan. Last Tuesday, we also talked about potential bottom from here to see a relief rally. We got the relief rally based on this extreme condition. There's a selling climax and also the extreme oversold zone for the market breadth. The extreme reading act as a contrarian. But having said that, it doesn't mean it's the best time to catch the bottom because of the huge volatility around the stock. It's easy to get stop out, or you also end up using a very wide stop. Means you only have relative small position size based on the current movement, current supply level has been decreasing and it's still holding up the gain. Look at this bar. Even after this 9% up move on Wednesday, Thursday is still showing a bit of the demand tail where we have smaller candle popping up on Friday, on Monday with decreasing of the supply. Is coiling before the expansion of the range. Suggests that short sellers still waiting for the chance for it to sell into strength, wait for a key level somewhere around 5,700. That's the level where a lot of the traders and investors are watching. Based on the price action, that still looks constructive, where we have the bullish flag formation, suggests a continuation to 5,700 or even 5,800. Somewhere around here, that could be the immediate target